Bob, we just want your first impression to the decision. What do you make of it?
It hit on pretty much everything we were looking for, probably a little less dovish than we thought in two instances. One, there was a dissent, so it wasn't a slam dunk, and we would have liked to have seen the median dot for the end of next year somewhere around 2.75% to 3%. But otherwise, as we had been guided over the last week, nothing to quibble about.
Bob, which bond series or individual bond provides the most information right now? Is it a real yield? Is it the nominal full faith and credit? What's of the most value to Bob Michele right now?
Credit spreads. Credit spreads will tell us whether investors believe the economy is in dire shape and this was an emergency 50 basis point cut, or whether this is just a Fed a long way from neutral, perhaps, as Mohammed hinted, a meeting or two away from where they should have started the cycle, so they're starting to get towards neutral. All is well.
Okay, all is well. And yet what we saw earlier this morning was an increase in mortgage applications. What we've seen is already the bond market pricing in all of this and then some, and basically this statement only encourages that even more. Do you not see a risk of potentially reignited inflation, Bob, that we could potentially see expressed in the long end? As Mohammed was mentioning, we are seeing that yield curve steepening in a way that hints that something else is amiss, especially when paired with gold.
Whoa, whoa, whoa. We're a long way away from that. We're looking at the 3-month annualized rate of core PCE running at 1.7%. So that's not inflationary. There's signs of disinflation everywhere. When you look at the labor market, they talked about full employment. Well, the low in unemployment was 3.4%. A couple months ago, it was 4.3%. That's up 0.9%. You only see that when there's threat of recession. That's characteristic of that. They've highlighted to us that the neutral Fed funds rate is somewhere around 3%. That's a debate we could have for a long time, but it's nowhere near 5.25%, 5.5%. So they can start taking pressure off of businesses and households without reigniting inflation.